Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach with Schwab, and this is an introductory level class. So if you are new to technical analysis, or you're not even quite sure what technical analysis is, you're in the right place. Back in July of 2011, I got introduced to technical analysis, which is simply or complexly, the art of looking at a stock chart. And we can look at stock charts that are reflect a day, charts that we see action minute by minute. We can look at charts that show us a period of weeks or months, and charts that show us a period of years. So it's really the art of looking at stocks and indexes and how they move and making sense out of it. So that's what we're talking about today. We're going back to the top of our rotation, and I am delighted that you are here to join us. I always like to start by welcoming those that are with us live. And so I'd like to, say hello to Jay and Piper and DR and Marcus and George and Rachel and Pine Tree and Will and David and Kurt and the rest of the gang. Thank you all for being here and for helping bring this class to life. I also want to thank my friend and fellow coach, Cameron May, who is with us in the chat. And if you've got questions, he taught this class for years, so he's an expert in all things technical analysis. And between Cameron and I, we should have answers for you. Know that everything that we cover here will be for general purposes only, none of it to be construed as a recommendation or personal investment advice. If we talk about options, and we will be, because we placed a couple of trades back on April 8th that we are going to close out today. And just know that those options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. For our examples today, we're going to use the Paper Money software application on the Thinkorswim desktop platform. And this is a brilliant place to learn and to make sure you understand what you're doing and have a trading plan in place before you consider trading in your live account. Okay, and just know that past performance does not guarantee future results. And that's an important thing to keep in mind when we are looking at charts and technical analysis. So we've designed this to be taught in about a 9 or 10 week rotation. I added an extra week on the last rotation to talk about Fibonacci's. I may add, an extra week or two, in this next rotation. We also added one to talk about diagonal resistance, breakout patterns, because, the charts were flooded with them at that time, and we thought we'd take advantage of introducing that concept. But roughly speaking, we're back now to week 1, which is our introduction to technical analysis, where we're going to talk about the what and the why of technical analysis. What is it and why do we care? We're going to go over some of the principles, some charting basics, and some key points. And we're going to go out and we're going to look at a bunch of charts, because I think that's where this really begins to make the most sense. And, this isn't a recommendation that you only look at technical analysis, because there are really a couple of approaches, and a lot of investors will look at two, depending on the time frame that you want to be invested. But technical analysis is really the study of charts, of looking at historical price and volume to identify and project trend. So, you're looking at where a stock has been lately and trying to identify where it's going next. And especially if you are looking at things from a shorter term perspective, this may be your primary area of focus. And by shorter term, I might mean, hours, days to weeks. Where we're looking at shorter term time frames. So, days to weeks is what we're looking at. And, fundamental analysis you know, we're looking here, if we think of the stock market like a vehicle, this is kind of looking at where the stock is going and where it's driving to. Fundamental analysis is where we stop and we look under the hood, and we're looking at a company's financial statements. We're looking at their balance sheets and income statements. And we're looking at their trends for sales, for maybe earnings per share. There's just a wealth of information that we can get if we dive in and look at fundamental analysis. That is not what this is. We're going to stay on this side of the road in this class, and we're focusing on the technical side, technical being looking at the charts and how they move. Okay. So, you know, price moves in trends. And we're going to take an entire class to talk about trend. And we're going to go out to the charts and we're going to look at a bunch of different trends. But basically, you know, we've got, and the one that we say, if you're bullish, bullish means you think the stock is going up. Bearish means you think it's going down. So, you know, if you're bullish, you want to see a stock that's kind of going up, right? If you're bearish, and we've seen a lot of these lately, you know, the stock is moving down. And sometimes it can drop pretty dramatically. And then if it's sideways, it's kind of going a whole lot of nowhere. And we've seen this on stocks lately like Dollar Tree, and you know, there are other examples out there. And then the market discounts everything, or you might say it takes into account everything. So that this current price that we see on the chart is a representation of the current collective market knowledge. And so some would argue, why do I have to look under the hood at fundamental analysis when the price of the stock is reflecting that and reflecting what's going on, you know, globally with markets, with what's going on with tariffs, with what's going on politically, that it takes all these things into account. You know, what's going on with earnings. Now, you know, price may be impacted dramatically by an earnings announcement. You know, and sometimes the anticipation of a positive earnings announcement can drive a stock up. But they say that history repeats itself, and it sometimes does repeat itself. And then sometimes it doesn't. So you don't want to count on that. But the reality is that humans tend to react similarly in similar situations. And someone in the chat last week chimed in. It was a quote from Mark Twain. It's like, history doesn't repeat itself, but it often rhymes. And, you know, it's kind of a tongue-in-cheek way of saying that, you know, humans being humans, you know, we tend to react similarly when things happen time and time again. Okay. So let me just clear this off. And so, you know, that's our trend. And like I said, we are going to spend a whole week talking just about trend. And, you know, when we look at some of the benefits and then some of the risks of technical analysis, you know, here are some of our benefits. So some people find this kind of intuitive when they look at a chart and they see a trend and they're looking at support and resistance. And if you're not familiar with support and resistance, we'll talk a little bit about that today. It's kind of the floor and the ceiling that a stock will often bounce off of. You know, but we'll spend a whole week on that as well. So some people find it intuitive. It's flexible. It can be applied in any market condition. So if things are really bullish, technical analysis still applies. If things are really bearish, like we've seen a lot of pretty bearish activity year to date in the market, in that a lot of stocks are going down, a lot of indexes are going down. There's been a lot of talk about things going down. But, you know, technical analysis is just as applicable as last year when so many things were going up. You know, and it's universal. So we can apply it in looking at stocks in the utility sector, in the technical, in the technology sector, in the consumer discretionary sector. We can look at it when we look at currencies. Technical analysis applies when we look at futures, when we look at, indexes. All of these things, we can look at charts, and technical analysis applies. So now, what are some of the risks? And this is that humans have a cognitive bias, which can lead to poor decisions. So if you want to see something bullishly, or see the bright side, there's often a way to see that. And I am an annoyingly optimistic person, but I'm also pretty realistic when it comes to looking at a chart. But that isn't to say that if you really love a stock, you can't be projecting some of that in creating a bit of cognitive bias. There can be slippage. So we may, it's the risk that a price may move more than you have bargained for or accounted for. And, that's a risk. And, the other thing is, it's often easy to know what you should have done in hindsight. But, isn't that life in general? But trend application means seeing things and having a set of guidelines, and technical analysis, there's some subjectivity in it. And it does require discretion to interpret. So, there are guidelines for technical analysis, but I believe that technical analysis is a bit of an art. And that's why people keep coming back to these webcasts that we teach week after week after week to see if what we see is what you see. And sometimes we're describing what we see to teach you how to be aware of the signs. I'm thinking about, trappers back in the day. I come from Northern Ontario. And people would be able to read the signs on a trail and know what animals had traveled there. And I used to do a lot of wilderness canoeing. And if you found fresh bear scat, you might want to, alter your course and go somewhere else. Because hugging a bear is one thing in the markets. It can be it's not something I want to do in the wilderness. Let me put it to you that way. So, being able to interpret signs as you see them, is important. Yeah. So in discretionary versus non-discretionary, like, what do we even mean by that? Well, this is part of this, cognitive bias thing, right? Like, do you see what I see? And one of my favorite expressions when looking at charts is playing I Spy with my little eye. Like, do you see what I see? And sometimes in the beginning, you don't, just because you haven't looked at a lot of charts. And so it's not as intuitive for you. But, it's discretionary in that it relies on your reading of the chart. And reading of the chart is really reading the price action, because it's how the price moves that creates the chart. Okay. But this requires human interpretation. And as human beings, we can sometimes add our own bias. Okay. And then that's difficult for others to see the same way you see. So, it can be different for others to replicate. Now, what are the non-discretionary bits? Whoops, didn't mean to do that. Let me just erase that. I'm getting all artistic. There we go. So this non-discretionary component, if there is a signal that is created that doesn't require human interpretation, such as a price crossing above a threshold. So we did one a few weeks ago where we created a trading plan which was based on something crossing above the 30-day moving average. And we called it 3 green arrows. Cameron will be smiling because this was a stock investing plan that we were both familiar with from many years ago, where we looked for a green arrow on the 30-day moving average, a green arrow on the MACD, and a green arrow on the stochastic. And so if those arrows are showing up, they're showing up. And we don't have to interpret that. We just have to see it. And so it becomes much more methodical, and it removes that human bias or requirement for us to make a decision. But what's the downside of that is it doesn't adjust for nuances or rare circumstances. But, it's an easier guideline or set of rules that are easy to replicate. When I see this, I enter the trade. And then if I see a red arrow, then I adjust my position. Okay. Yeah. Yeah. Wiley is saying, I need a paint by number. And so having a trading plan is a way of creating kind of a paint by number type scenario or structure for you to work within. And, we can interpret those plans with some nuances, and know which rules we aren't going to break, like position sizing, for example, is a rule you might choose not to break. And then other rules, you could say, well, I wanted to get out when I had 80% of my max gain, but I got 50% of it in 3 days instead of waiting for 80 in 3 weeks, and I'm going to take it. So does that make sense? Yeah, the 3 arrows are based on a daily chart. And this is where I'm going to bring up the Trader Talks. Here we go. And I just want to point out a couple of things. So, when you first go to Trader Talks, and if you haven't already subscribed to the channel, you'll want to do that. But this is the class that is happening now. If you come all the way to the bottom, which is where the Getting Started series is, here's Getting Started with Technical Analysis. And so I started doing some shorts, and I'm away again at the end of this week for the Dallas 2-day workshop. And if you've never been to a workshop, you're going to want to check those out. They're absolutely fantastic. I love going to them as a client because I could just totally immerse myself in the world of trading. And the first day on this one, I don't remember if it's an advanced option. Let's just go and check it out. So it's schwab.com/coaching. And this is where you can see, the whole schedule day to day. But if you come to in-person events, here's our Dallas. So this is an advanced option strategy. And so we're 2 days on advanced option strategies in this class. The next one in Denver, both Ben Watson, he'll be leading it, and Kevin Horner will be there. The first day is all about intro to technical analysis. Second day is intro to options. And those are really fantastic too. And then I'll be back in Anaheim with Ben for another advanced option 2-day event. And even if you're newer to these, I think you might find them helpful if you understand some of the basics. But, you can just, click on here to learn more. And I think that registration for Dallas may be closed. Looks like you can still register. They had closed it, and I believe they got some additional seating. So you can view the agenda, some frequently asked questions. There's no charge to attend. We'll pay for your parking if there's a parking charge. We'll provide breakfast and lunch. I'd highly recommend them. And then if you want just the regular webcast, come to live webcasts. And then this will give you the whole thing. And I typically teach every day. So if you're saying, oh, what classes does Barb teach? Here they all are. Okay. Tomorrow, it looks like I'm doing 2, and that's because I'm covering for Ben. Trading index options. If you've not come to that class, Ben is doing some super cool stuff there. So you'll want to check it out. I'm excited to be filling in for him again tomorrow. Okay, so that's that one. Okay, so back to our regular programming here, because I do want to get out to a bunch of charts. Um, so this is part of having a defined and repeatable formula is having a watch list criteria. And it was Cameron May that said this so succinctly. Like when you create a trading plan, it's, what are you going to trade? So it's like what to buy or sell, when to buy or sell it, how much to buy or sell. So what to buy, when to buy, how much to buy. That is our what to trade, when to get in. So when to enter the trade, how much to trade, and then when to exit. And then what are your daily routines? So I've started creating a bunch of example trading plans, and those are in the trade management mini sessions section. So if you scroll down, trade management mini sessions, here we are. So the first four, I've done some shorts, and these are in the getting started with technical analysis section also, but some shorts on candlestick patterns. And then there's a bunch of example trading plans here. And I'm going to put in that stock investing 3 green arrows once I get back from Dallas. Oh, here's a simple stock investing plan. So here's that plan. I did it already. There we go. Okay. So if you want to find a simple stock investing plan, there you've got one right there. Okay. And we're going to come out and we're going to look at Costco in just a minute. We're going to look at a lot of different stocks, actually. But have a plan. And if you have a plan, it helps install that discipline. Because your chart, it's a function of price and time. So we've got price on the right side. And then we've got time here. And our time, it can be hours, it can be days, it can be weeks, it can be years. It can be months, it can be years. So, and this is a line chart that just takes the closing price each day and then it just connects the dots. And you'll see here it's green when it's going up and red when it's going down. And they often do that to just illustrate that it's either bearish or bullish. And usually there will be a volume graph at the bottom of the chart. And if you see a really big move and a big candle, that lends credence to that's, a strong move. Now, if you see a bar on the chart, it shows us 4 things. It shows us this is a bullish bar, so it opened lower, closed higher, and throughout the day, it came down to what turned out to be the lowest price of the day, came up to the highest price of the day, and then closed here. Now, if it's bearish, the difference is that, well, and, there are a couple of differences, but here we had our opening here. Here we're opening here, and then we're closing lower. So it's bearish if the price closed below where it opened. And then again, we had a high of the day and a low of the day. So we've got a high, a low, an open, and a close. Whether your candle is uptrending or downtrending, bullish or bearish. Now, some say, well, so this is what it looks like on your chart. And so see here, it opened at what turned out to be the low of the day, closed at very close to the high of the day. Here, this is a red candle. The bar that's on this side is where it opened, and the bar on this side is where it closed. Now, the reason this is a red candle is because it closed lower than the candle of the day before. So we've got open, close, and then the range. Excuse me. Spring allergies. So the color indicates how the bar closed to close. So if it's green, it means it closed higher than the previous day. And if it's red, it means it closed lower than the previous day. Okay. Now, when we have a bar versus a candlestick, what a candlestick does is it just takes our high and our low and it creates a candle out of it so that it's easier for us to see. So here was our open. It dropped during the day, it closed here. So when we take this and we turn it into a candle, that becomes our candle. And I don't have a green color here, but it opened here, closed here. And so candles is what you'll see most of the coaches using. And they're a fairly popular way for people to, set up their charts. And so here's our bullish candle. It opened, closed higher, and throughout the day, we have the same points that we do on any of the others. We have a high, a low, an open, and a close. A high, a low. Here's the open is higher on a bearish candle, closes lower. And that's how we create our candlesticks. So it shows us the open, which is determined by color, and the close. And then the range is the wicks, the tails. And the green means it closed higher than it opened. The red means it closed lower. And if you do candle trend, then your candle will also be colored according to whether or not it closed higher or lower than the candle of the previous day. You'll also notice at the top of your chart that if you hover over a candle, it will show you the date. So here's our example here. Is this, if we were to hover with our cursor over this February 1st candle, that's this candle, then up here you will see it opened at 84.16. The high was 85.89. The low was 83.61. And it closed at 85.21. And this range means that from the high to the low of the day, to the low, that was our range. And on that day, it was 229. And Y just shows you where your current cursor is currently resting. Okay. And then you, depending on what type of trader you want to be. So if you're looking at a short-term trade, you may be looking at, days to weeks. Now we don't have a day chart here. So very short term would be hours. And for many traders, they're looking at hours if they're just looking at something after an earnings announcement. So we could say here's a weekly chart that's looking at years, a daily chart looking at weeks to month, and a 1 hour chart, you may just be looking at a period of a few days. Okay. So, understanding your time frame is important. And even if you're looking at a chart, a daily chart, because you're thinking you just want to be in something for a few weeks, you may want to also step back and look at the weekly to give you a longer term perspective. Okay. And again, I've mentioned volume and it can help illustrate the strength of a move, but it doesn't indicate direction. And you can have a flat day with high volume and that can just indicate, be a sign of indecisiveness. But if you have a really big up day and high volume, or a big down day with high volume, it's considered a stronger indication of that trend, either bullish or bearish. So let's go out and look at some stocks. So I brought up Costco, and here is a 1-year chart. And, we look at this from left to right. So we can see here's a stock that's gone from $700 a share to over 1,000. It's up 5% year to date. It did pull back recently along with the rest of the market, and it closed. Now, this moving average is a 200-day moving average. It did close briefly below that, but it seems to be moving back to the upside. And a couple of weeks ago, on April 9th, in our Getting Started with Technical Analysis, we were looking at examples, and we decided to do 2 examples. And one was to sell a short put. So when we sell a put, it's actually a bearish it's a bearish trade, because our expectation, if we're doing this to make some money, as opposed to using it as a way of acquiring the stock, is that we believe that the stock is going to stay. Same day, we also did a short put vertical, as a way of looking at what a trader with a smaller account might do, or a trader who might have a larger account but is saying, I don't want to own 100 shares of Costco. It's a little too rich for my blood. And so those 2 trades, if we come back and look at them, here's our short put. We have 85% of our max gain, or just 84, but it's unrealized. So what the market giveth, the market could taketh away. So we received $24.60 a share, or 2,460. It's now worth 385. So what we're going to do is we're going to take our unrealized gain and turn it into a realized gain by buying this back. So we're going to right click and create a closing order to buy it back. Can I share my Costco chart? You like the badges at the top. So sure. So our badges at the top on this, you mean these, the year to date, month to date, week to date change? That's a script. And you can get that by going to my X page. There are a number of scripts there. And I also, in the trade management mini session, there's a how to set up your chart. And I'm just saying, hey, if you wanted it to look like mine, here's what you would do. And I show you how to import that script. Okay. Okay. So the other thing that we did with Costco that same day is we did a short put vertical. So if we come to our account statement, so we sold a short put vertical for $2.05, and we just bought it back today for 20 cents. And we just did one of those. Now, it wasn't proper position sizing. It was just to illustrate a concept. And so, we made about $1.85 or $185. But had we properly position sized, we probably would have done about 10 contracts for this account, and that would have been $1,825. So it would have been closer to what we ended up making by, to the $2,000-ish that we made by selling the put. Now, so when we look at a chart like this, and we just have 10 minutes left, but could we look at this and say the longer term trend, and if we could come out and look at a 5-year chart, well, we see a stock that's gone up, by over 300% in the last 5 years. It's gone from 268 up to 1,078. It's now down at 977. So, is this longer term uptrending? It is. And then we could come in and say, well, I'm just going to look at this 6-month chart. So it was uptrending, got pulled down with the market, and appears to be uptrending again. And this candle pattern at a support level is considered to be a bullish harami, because today's candle is inside the body of yesterday's candle. And I'm trying to post another kind of cheat sheet for that. Yeah. So, and not but saying, if it was a bearish trade, wouldn't we buy a put? We would. If we're selling a put, we're being bullish. But with Costco, if we say, I don't know what's going to end up happening with the market through the end of the year, but I could see this stock, staying in this range or continuing to go up for the next couple of months. And one of the things, if we look at this is considered to be a consumer staple stock. And when we look at the sectors, consumer staples has been one of the strongest. It has been the strongest sector over the last month and the last 3 months. And so we've demonstrated a short put and a short put vertical. Could we just buy 50 shares of stock and say, hey, if it gets back up to this 1,078, we'd like to take our money and run. And, if we look at this here, and say we've kind of had a bit of a support level here that it broke down below just temporarily, maybe we'd put a stop, if we wanted to use a stop, at 942.97. That's today's low, and take, say, 3% off that. 942.97, that's a recent low, times 0.97. So that'd be 914.60. And then we put a target of that previous high around 1078. And, we had this $500,000 account here. If these shares are almost $1,000 a share, we might say, well, a $25,000 position would be close to 5% of the account size. We'd be okay with that. So we're going to buy custom with an OCO bracket, which means one cancels the other. So we're going to buy 25 shares. And then when I click this paperclip and click anywhere on these lines, it will align things. And I'm going to put my target as 1078, previous high. And my stop, I'm going to make 914.60. And we're putting this in our stocks with a target. Okay. So there's one example. Now let's look at some stocks and just look at, how we might look at these stocks as a technician. So here is JP Morgan. Now, I don't know if you're like me and you like to draw lines, but I'm a line drawer. So when I look at this, I would draw a line here, then say, it looks like it's coming down to kind of a similar place. So I might even want to duplicate my line and draw it down here. And so it shows me that JP Morgan has been moving in a bit of a downward channel. And if I wanted, if I'm saying, I think it's a good company, I wouldn't mind investing, you'd want it to break out of this channel. And so you might look at it that way. Okay, so that's downtrending. How about Goldman Sachs? Do you see something kind of similar there? And again, we could kind of draw it the same way. It's also, and we have a 30-day moving average and our 200-day moving average, and it's below the 200-day, it's below the 30-day, so those aren't very bullish, are they? And then if I duplicate this drawing, oops, click, actually, yeah. Okay, so I've already duplicated it, sorry. So let's activate one of these then. And I pull it down. And you're just trying to hit as many lines as you can. So, you know, on this day it gapped lower, it closed up around here, but we've got a support level in this range. So again, a downtrending range when we look at the chart. How about Dollar Tree? And somebody had asked a question on, you know, ranges. And so I just wanted to point some of these out. So this is a 6-month chart, but if we come back to a 1-year chart, so Dollar Tree was rolling down the hill, so downtrending, right? Below the 200, below the 30, and weaving back and forth between the 10. But since last September, it's been trading in a range between about $60 and about 77. So that's been kind of a long-term sideways trend. And sometimes stocks can go sideways for a long time. And, you know, this line would be called a support level, and the top line, a resistance level. And there are some technicians that would argue that every time a stock comes and hits a resistance level and then falls down, that resistance level gets stronger. And then we had 1, 2, 3, 4 days in a row it hit. And then it kind of came up into the neighborhood and then hit again, and then hit again. And now it seems to be breaking out. So then a technician, what might they do with that? They might say, well, hey, I see this range of about $17. If I wanted to be bullish on this stock and put a target on it, I might take that 77 and add the 17. So that'd be what, about 94? And maybe make a new target here at around 94. And they might buy shares of stock. They might use an options trade. You could do, you know, whatever you wanted. Okay, so bullish, if we were bullish. Let me just close this. Let's look at Netflix. And some might argue that this is a staple for a lot of households. Others might call it consumer discretionary. But, you know, I don't get to pick what category it goes into. It's actually in the communications category. But, you know, when we look at the last year, you know, it's been moving to the upside, got caught up like so many other stocks and pulled back. But today it's hitting a new 1-year high. And so, and we just had earnings. So you might want to go and look at that earnings report. That isn't part of technical analysis, but it can be part of a well-informed decision. So guys, you know, this is our introduction, you know, to technical analysis and looking at stocks moving up, moving down, and moving sideways. And even if the market overall, like if we look at the SPX, it's the S&P 500, it's down over 10%. It doesn't mean every stock in the S&P is down. When we look at Kroger, it hit a new all-time high today. And Costco hit a new high today. And one might argue, you know, it's gone Kroger from $49 to $73 within this last year, that it has been uptrending. So guys, lots more to come in this series. I want to thank Cameron for being with us today and helping out in the chat. I want to thank the people behind the scenes for working their magic to bring this to you, and to each and every one of you for continuing to show up. I thank you. Please hit the like button. I don't believe there was a survey today, But don't forget to follow us in the Land of X, Barb Armstrong CS, Cameron May CS. We're posting lots of great content. Subscribe to the channel. We spent a little bit of time there today. There are some short videos also that you'll want to check out. I just posted a couple of those on X as well. And have yourself a really awesome day. Take care, everyone. Bye for now.